Investing in real estate with no money down may sound like a dream come true for many people. The idea of being able to purchase a property without having to come up with a large sum of money up front is certainly appealing. However, it is important to understand that this type of investment strategy requires careful planning and a solid understanding of the real estate market. There are several ways to invest in real estate with no money down, but it is important to approach each option with caution. One of the most common ways to invest in real estate with no money down is through seller financing. This involves negotiating with the seller to finance the purchase of the property, allowing you to make monthly payments instead of a large lump sum up front. Another option is to partner with other investors who have the capital to invest in a property. By pooling your resources with other investors, you can collectively purchase a property without having to come up with all of the money yourself. This can be a great way to get started in real estate investing without having to take on all of the financial risk. It is also possible to invest in real estate with no money down by using creative financing strategies, such as lease options or subject-to financing. These strategies involve taking over the existing mortgage on a property or leasing a property with the option to purchase it at a later date. Ultimately, investing in real estate with no money down requires a combination of creativity, negotiation skills, a solid understanding of the real estate market, and by carefully considering your options and working with experienced professionals. However, investing in real estate with no money down might seem like a challenging feat, but it's entirely possible with the right strategies and resources. Here's a step-by-step guide to help you get started. Step 1. Understand real estate investment basics. Before diving into specific strategies, it's essential to understand the basics of real estate investing. Types of real estate investments. Residential properties, single-family homes, multifamily homes, condos, and apartments. Commercial properties, office buildings, retail spaces, and industrial properties. Land, undeveloped land that can be developed or held for future appreciation. Key concepts: cash flow, the net income from a property after all expenses have been paid. Appreciation, the increase in property value over time. Equity, the difference between the property's market value and the amount owed on it. Step 2. Build a strong credit profile. Having a good credit score can significantly enhance your ability to secure financing and favorable terms. Tips to build and maintain good credit. Pay bills on time. Consistently pay all your bills by their due dates. Reduce debt. Pay down existing debt to lower your debt-to-income ratio. Credit utilization. Keep your credit card balances low relative to your credit limits. Step 3. Leverage your network and knowledge. Networking and leveraging the knowledge of experienced investors can provide valuable insights and opportunities. Networking strategies. Join real estate investment groups. Attend local meetups or join online forums and groups. Connect with professionals. Build relationships with real estate agents, mortgage brokers, and property managers. Mentorship. Seek out mentors who have experience in real estate investing. Step 4. Explore no money down strategies. Several strategies allow you to invest in real estate without upfront capital. 1. Seller financing. In seller financing, the seller acts as the lender, allowing you to purchase the property and make payments directly to them over time. Steps. Identify properties. Look for motivated sellers who might be open to financing the sale. Negotiate terms. Agree on the interest rate, repayment schedule, and other terms. 2. Lease options. Lease options involve leasing a property with the option to buy it later. Steps. Find a property. Locate properties where the owner is open to a lease option agreement. Negotiate terms. Agree on the lease duration, monthly payments, and purchase price. Option fee. Negotiate a low or no option fee to secure the right to purchase the property later. 3. Partnerships. Partnering with others can help you pool resources and invest in real estate. Steps. Find partners. Look for investors willing to provide capital in exchange for a share of the profits. Create agreements. Clearly outline each partner's role, contribution, and share of profits in a formal agreement. 4. House hacking. House hacking involves living in one part of a property while renting out the other parts to cover the mortgage. Steps. Buy a multi-unit property. Purchase a duplex, triplex, or fourplex. Rent out units. Rent the other units to tenants, using the rental income to cover the mortgage and other expenses. 5. Real estate wholesaling. Wholesaling involves finding properties below market value, securing them under contract, and selling the contract to another investor. Steps. Find distressed properties. Look for properties in need of repair or owned by motivated sellers. Negotiate contracts. Secure a contract with a low purchase price. Assign the contract. Sell the contract to another investor for a fee. 6. Private money lenders. Private money lenders are individuals willing to lend money for real estate investments, often in exchange for higher interest rates. Steps. Identify lenders. Look for individuals or companies that lend money for real estate investments. Negotiate terms. Agree on the loan amount, interest rate, and repayment schedule. Step 5. Utilize creative financing. Creative financing involves using non-traditional methods to finance real estate investments. Methods: hard money loans, short-term loans secured by real estate, typically used for property flips. Home equity lines of credit, HELOCs. Use the equity in your existing property to finance new investments. Peer-to-peer lending. Borrow from individuals through peer-to-peer lending platforms. Step 6. Research and due diligence. Thorough research and due diligence are crucial to successful real estate investing. Key steps: market analysis. Study the local real estate market to understand trends in property values. Property inspection. Conduct a thorough inspection to identify any issues or repairs needed. Financial analysis. Calculate potential cash flow, ROI, and other financial metrics to ensure the investment is sound. Step 7. Execute and manage your investments. Once you've secured a property, effective management is key to maintaining and growing your investment. Management tips. Property management. Consider hiring a property management company if you're not interested in managing the property yourself. Tenant screening. Carefully screen tenants to ensure they are reliable and can pay rent on time. Maintenance and repairs. Regularly maintain the property to prevent costly repairs and keep tenants satisfied. Step 8. Scale your investments. As you gain experience and build equity, look for opportunities to scale your real estate investments. Strategies to scale. Refinance properties. Use the equity in your properties to finance new investments. 1031 exchange. Defer capital gains taxes by reinvesting proceeds from a sold property into a new property. Expand portfolio. Continue acquiring properties using the strategies that worked initially. In conclusion, investing in real estate with no money down is a viable option for those who are willing to put in the time and effort to make it work. By exploring different financing options, partnering with other investors, and taking advantage of creative strategies, you can successfully invest in real estate without having to come up with a large sum of money up front. With careful planning and a solid understanding of the real estate market, you can achieve success in real estate investing without breaking the bank.